Hi, I'm Carmichael of PwC Global Accounting Consulting Services. Today I'm joined by Holger Meurer to take a look at some of the new guidance contained within IFRS 16 leases. Contracts often contain a number of obligations on the part of suppliers. A contract might contain more than one lease component, or it might contain a combination of lease and non-lease components. For example, the lease of an industrial area might contain the lease of land, buildings and equipment, or a lease of plant might contain a lease of the plant itself, plus also an obligation to provide maintenance services. Holger, what does the standard tell us in terms of how to account for these multiple element arrangements?
Well, IFRS 16 requires each separate lease component to be identified and to account it for separately. A lease component, or the right to use an asset, is a separate lease component if two criteria are met. First, the lessee must be able to benefit from that asset either on its own or together with resources that are readily available. Second, the asset must not be highly dependent on or highly interrelated with any other underlying asset in that contract.
Holger, these criteria that you're telling us about seem to be quite similar to those within IFRS 15 in terms of how to assess whether a good or a service are distinct. How do the two standards interact with each other?
Well, in a multiple element arrangement, the lessor first uses the guidance in IFRS 16 to assess whether there is one or more separate lease component within the contract, and then in a second step, again based on the guidance on IFRS 16, whether those lease components need to be accounted for separately. Then in a third and final step, he uses the guidance in IFRS 15 for what is left, so for the non-lease component, to assess whether they are separate performance obligations.
Okay, so that covers how we identify the separate components within the lease. What guidance does the standard then provide us when it comes to allocating the consideration between those components?
Yeah, the standard contains guidance for both the lessee and the lessor on how to allocate the consideration. Well, the lessee allocates the consideration based on relative standalone prices.
And the lessors?
Well, the lessor is more in line with the IFRS 15 guidance, and the lessor does it based on standalone selling prices.
Okay. It sounds like there could be quite a lot involved in actually performing this allocation. Are there any reliefs available?
Yes, for lessees there's a practical expedient, so a lessee can decide not to separate the lease and the non-lease component, but instead account for each lease component together with any associated non-lease component just as one single lease component. He can do this as an accounting policy choice based by class of underlying asset.
Okay.
What's important to note, and if he does so if he does not separate lease and non-lease component, the lease liability will be higher. That's why the IASB has had the expectation that the lessee would only do so if the service components with a non-lease component is not significant.
Okay, so that's the initial allocation. What about the subsequent accounting?
Well, the subsequent accounting depends on whether it's a lease or non-lease component. So for the lease component, it would be IFRS 16. For the non-lease component, it would be any other standard that's applicable. So, for example, IFRS 15.
So that covers separation of components. I believe that the standard does also contain some guidance on combining contracts.
Yes, that's right. I mean, quite often contracts are entered at or near the same time or in contemplation of another. And IFRS 16 has some guidance on when the contracts are entered at or near the same time and with the same counterparty or related party, that contracts need to be combined if certain criteria are met.
What are those criteria?
Well, there are three things an entity would have to look at. First, it would need to look at whether those contracts are negotiated together as a single package with one overall commercial objective. Second, it would have to look at the price and the consideration for contracts. So if the consideration for one contract is linked to the price or the performance of another contract. And the third criteria would be whether those underlying assets in the different contracts are one single lease component. If one of these three criteria are met, then the contracts need to be combined in order to assess whether there is a lease, and if there is a lease, they are accounted for as one single contract.
That's really helpful, Holger. Thanks for talking us through it. For more on IFRS 16 leases, we have a range of other videos available, together with a number of publications that are available in PwC Inform. For more, please reach out to your local PwC contact. Thanks for watching.